With us now for more is Cristina Ulang, Research Head at First Metro Investment Corporation. Good seeing you again, Chris. Welcome back to the program.
Hi, good morning, Kathy. Thanks for having me.
All right, so it's a shortened trading week and the peso is at its lowest this year. It's still unchanged just moments ago, and the PSEI at a 7-month low. We saw these in the technical charts even before they happened. So how are the fundamentals looking, Chris?
We have this rate cutting cycle, and it's a very hawkish signal from the BSP, and that's really intended to shore up growth, the GDP growth for 2026. So these are short-term pains, no pain, no gain. So we're seeing the peso slide a bit versus the US dollar, and that's really because of this yield differential maybe narrowing to 50 basis points between the US dollar and the peso. So this is the market really doing a knee-jerk reaction to this hawkish signal from the BSP of a potential cut by December.
So do you see more pain, Chris? And what sort of a level are we looking at then for the PSEI?
In terms of the inflation, the pass-through is really small coming from the peso-dollar weakness. But of course, the confidence level is being eroded by the weak peso. And as historically, the PSEI has not really performed well during times of peso weakness. So we may see a bit of erosion further of the PSEI, maybe moving and trying to test the lower end of the trading range. We're now at 5.9 and maybe a bit lower than 5.9 given this new territory for the peso. Not really new, but trying to flirt with 59 and even above 59. But these are I think very short term. We will see inflation is still moving in line with expectation. I think that's going to give some assurance. And of course, the Fed also is moving in the direction of cutting, and that's going to further weaken the US dollar. Of course, we have our own fundamental weaknesses in terms of the deficits. Our BOP deficit is still very wide, 5.3 billion US. We have a current account deficit. So these are some of the fundamental weaknesses of the currency, but that's going to be tempered by the fact that the dollar is weakening also.
And also the GDP for the third quarter coming out on November 7th. What sort of a result are we looking at, and to what extent might that be because of the anomalous flood control projects, corruption and governance concerns hounding the economy?
It's nice to hear, to read into the corporate earnings results demonstrating some resiliency on the part of earnings. Like for instance, BDO, which is this is a banking franchise, one of the biggest actually in the country, showing very strong resilience, 5% and meeting expectation for the third quarter. So I think that suggests that our GDP for the third quarter or fourth quarter might just be at the level of the first quarter. Although for next year, we may see a moderation. The BSP has said it's going to not really be in the vicinity of close to 6%, but lower than 5.5%. So I think the moderation is going to happen maybe early next year. And the BSP is really trying to prepare to shore up, to support the economy by way of more rate cuts, so that we at least are able to be within the 5.5 or 5.7% GDP growth for 2026.
Also linked to the economy, Meralco. It's just reported earnings, CCNI up by 14%. What do you make of its earnings?
The management is very confident that they're going to be meeting their target, and that the results are again in line. There's no positive surprise. Even with BDO, they're all in line with expectation. And I think that's a good news already, given the many challenges that we're facing from the governance front, from the climate front, and from the international trade front. So many challenges, and yet our corporates are turning up income that meet expectation. Although there are no fireworks, Meralco really very showing resilience. It's a defensive stock, and I think this is one of the stocks that investors should be buying, given the uncertainty all around us because of the high dividends it pays, the steadiness of the cash flow, and you've got to be really defensive these days because of, and I think Meralco gives you that. Given the growth in the power generation, that's really the gem, the gem of the Meralco power gen. The power generation, they're into RE, and of course the transition energy of LNG, of course.
A final point, Chris, any fireworks or the biggest IPO of the year, Maynilad?
The cornerstone investors are really showing their vote of confidence to this water franchise holder, biggest in the West and West Zone. And I think it's also another defensive play similar to Meralco because dividends could be as high as 6.67%. And earnings growth, if you're going to look at the two-year CAGR, I think it's about 46%. And then the first half also is higher by 12%, 7.4 billion. If you annualize that, that's 14 billion, and that translates to a PE of like 7.5. And this is and if you're going to compare it with regional would have PE of like 12, 16, and as high as 20. So while it may be at a premium versus Manila Water, I think it's really a strong buy for people who want steadiness of the cash flow, strong operating performance, good profitability, and dividend yield.
All right. Well, thank you so much for keeping us up to speed. Cristina Ulang of First Metro Investment Corporation.